Hello, welcome to the last module of financial management, where we'll be discussing the ethical issues and corporate governance in financial management. And in today's complex financial environment, sound ethical practice and strong corporate governance are fundamental pillars of suitable business success. So for financial management managers, uh, serves as steward of capital and custodian of trust. A trust easily compromised when decisions are made unethically or when governance structures are weak. So we see that financial managers are meant to be stewards of capital and custodians of trust. And when this is being breached, where the trust is compromised, that is what we know as what we can refer to as ethical issues, the unethical aspect of a particular discipline or profession. And we'll be talking about that of the financial management. So global corporate standards like Enron, the WorldCom, and the 2008 financial crisis highlighted the devastating consequence of unethical financial practice and poor corporate governance. So these incidents accelerated demand for higher ethical standards and robust regulatory oversight in the world. And that is why it is essential that we look at this as we round up the course. What do we actually understand as corporate governance? Corporate governance provides the framework of rule, relationship, and processes by which authority is exercised and controlled in corporations. So it balances interest of various stakeholders while ensuring legal and ethical conduct, improving investors' confidence, and contributing to long sustainability. And when we talk about this, we have the core principles of corporate governance. We have accountability, we have transparency, we have responsibility, and we have fairness. And apart from that we have independence, and we have ethical behavior and integrity. Now, when we talk about accountability, it ensures board members and executive are answerable for their actions through oversight, transparent evaluation system, and reporting structure. For transparency, it requires accurate, timely disclosure of material information, which includes the likes of the financial results, operational activities, and risk. For the responsibility as one of the core principle of corporate governance, it shows that it obligates directors to act in the company's best interests, fulfilling fiduciary duties and ensure compliance and manage risk. This shows the responsibilities of directors and also the fairness aspect of the principle of corporate governance portrays that there is need to ensure equitable treatment of all shareholders and consideration of all stakeholders' interest in corporate decisions. The independence part of corporate governance as a core principle talks about independence relating to the objectivity and impartiality of the board and its committees when dealing with critical decisions, such as the aspect of auditing, executive compensation, and also conflict resolution. And this requires independent non-executive directors free from relationship that could interfere with judgment, the likes of serving as counterbalance to dominant shareholders of executive management, and enhance oversight and minimize conflict of interest. For the ethical behavior and integrity, it shows the ethical conduct and integrity are central to good corporate governance, and it reflects the values and culture of the organization. And when we talk about this, board must set the tone at the top by modeling ethical behaviors. It is not that they will now tell the subordinates to do something that is good while they are not modeling such an ethical behavior. So it starts from the top. And also, organizations should implement ethical training and reporting mechanism. And lastly, ethical leadership reduces risk of corruption, fraud, and unethical practices. What are the core ethical principles in finance? So we've talked about core principles in governance, corporate governance. For finance, ethics in financial decision involves applying more moral principles and professional standards to processes and choice in managing financial resources. So we see according to Rose Westerfield and Jordan 2013, ethical financial decision integrates fairness, integrity, and transparency into financial practice to safeguard stakeholders' interest. So this ethical principle in finance include integrity, objectivity, confidentiality, transparency, and accountability. And we can see that this is working, it works together with also the corporate governance, showing that for every field, there is virtually these principles are working together to achieve best ethical practices in each of the disciplines. And for integrity, it is the cornerstone of ethical financial management, which involves the truthfulness and honesty in all financial practices. Objectivity requires decision based on impartial judgment and factual analysis, which is free from biases and influences. For confidentiality, this is the ethical responsibility to protect sensitive financial information from unauthorized access or misuse. And we also have the transparency, which is it's providing clear, accurate, and complete financial information to all stakeholders. And this is the core principle in finance. We have some other ones though. We have accountability also as part of it. And what are the critical areas for ethical financial decision making? We have the financial reporting, capital budgeting and cost allocation. We have the insider trading and market abuse, and we have the executive compensation. These are critical areas we talk about in which deals with ethical financial decision making. For the financial reporting, it must follow the ethical standard of HIFA code and IFRS or GAAP. Also, for capital budgeting, it requires realistic assumption and honest risk appraisal. For the budgeting and cost allocation, there is need to avoid inflating budgets or misallocating costs. For insider trading and market abuse, it talks about respecting confidentiality and avoid using non-public information. And for the executive compensation, it should actually be fair. It is from their hands, so there should be fairness and performance-based and transparency in doing such a compensation. And that is why it is a critical area for ethical financial decision making. The ethical framework and decision model for financial decision making. There are several frameworks which guides decision in finance and this helps professionals navigate complex situations where multiple stakeholders' interests must be balanced. And this framework stated below, we have the utilitarianism, which talks about the action are judged based on their outcome. The actions are judged based on their actions. We have the deontology, which is duty-based ethics. And this deals with the decision are made based on rules, duties, and obligation rather than the outcome. We have the virtue ethics, which emphasizes moral character. It elaborates moral character. And lastly, we have the stakeholder theory, which talks about ethical decisions should consider the interest and well-being of all stakeholders, not just the shareholders, balancing multiple perspectives. So you need to take into consideration both the stakeholders and the shareholders. And this is ethical framework. These are the ethical frameworks that we discuss. What are the things to be done in promoting ethics in financial management? The first is to establish a code of ethics, that is developing clear expectation and guidance on acceptable behaviors, providing specific examples relevant to financial management. The second is implementing strong internal controls, that is the likes of designing systems to prevent fraud, misappropriation, and data manipulation. The next is provide ethic training, and this is a form of equipping employees to handle dilemmas and understand professional standards through regular workshops, case study, and scenario-based learning that addresses real-world financial ethics challenges. And lastly, we have the likes of to foster an ethical culture, that is encouragement of openness, whistleblower protection, and ethical leadership. This is very important in promoting ethics in financial management. What are the roles of the regulatory bodies in financial management? The regulatory bodies actually have the role of maintaining integrity, stability, and transparency of financial market and institution. So their oversight ensure complaints and financial professionals adhere to established law, ethical standards, and best practice, protecting investors and broader economy. So their roles is one, to establish financial reporting standard, just like the IASB and FASB. They establish financial reporting standard, and this is one of their roles. Another role is ensuring market integrity, and agencies like SEC and FCA are invested with monitoring and enforcing laws that prevent fraudulent activities. Another role is supervising financial institutions, and regulators impose capital requirements, liquidity standards, and risk management practices to mitigate systemic risk and preserve financial stability. And lastly, they have the role of enforcement and compliance. They have to enforce and comply, which they actively monitor compliance through audit and investigation with authority to impose penalties on entities violating regulations. And in conclusion, ethical financial management and robust corporate organizations are indispensable for maintaining trust, transparency, and long-term sustainability in today's complex business environment. So by adhering to these principles that we've talked about, and also complying with regulatory framework, organization can mitigate risk, protect shareholders' interest, and foster ethical decision making. This, we've gotten to the end of the class, the course financial management, and I want you to take time to go through each of the notes. It contains a well explanation, it contains well explained parts of the topics we've talked about in the 10 modules, and I want you to go through it one after the other and do the assessments that are also there to enhance your ability to comprehend, to show how much you have been able to understand the course. Thank you.